What are the factors that you consider before making an investment decision? For capital investments, economic factors like net present value, internal rate of return etc. are widely used in evaluating whether or not to invest in a capital asset. But, here we are talking about personal finance, and so we're referring to investment decisions like share market, mutual funds, FD, NPS, etc. So, coming back to the question, what are the things that you consider while buying a share, or starting a mutual fund SIP, or putting money in FD or investing in crypto? For anyone who wants to invest, there are a whole plethora of options available. But what is the basis that helps us decide which option is better? Mostly, we rely on historical data to decide something. The return in last 3 years, 5 years, and 10 years are presented in tabular form, by every mutual fund house, to let us know how the fund has performed in the past. Not just mutual fund, past history plays an important role in decision-making in every aspect, and that's why we heavily rely on it. It surely provides a close look at how the future is probably going to be. But there are two things. Number one is, there are uncertainties in life, and hence we cannot expect that the future to be like the past. Same applies to all types of investment instrument. However, since we do not have any other better way of finding out how the future is going to be, we must continue to rely on historical data. Secondly, sometimes the investment instruments are so beautifully presented that it makes us believe that there is no other investment option available that can provide the same level of return. This is a serious issue. Let's talk about it. There has been a buzz about investing in US stocks. But is it really worth it? Let's have a look at the major US stocks and compare them to top-performing Indian stocks. As we can see from the table, out of the 4 top-performing companies, Adani Power is having the least growth per annum, i.e. 187%. Yet, this is higher than the highest return giver in US market, Tesla, giving 162% growth per annum. In share market, anything beyond 20% growth per annum is considered an excellent growth. So, both Adani and Tesla are performing exceedingly well with whooping growth beyond 100% per year. But, what is so lucrative about US stocks that will make us invest in it, when our domestic market is performing better than the US stock in terms of return on investment? Comparison between top-performing stocks may not be an indication of overall performance of the stock market in terms of return on investment. Let's have a look at the 3 major US indices: Dow Jones Industrial Average, Nasdaq Composite and S&P 500. In the last 5 years, Nasdaq has shown the highest growth of 51.75%, followed by S&P 500 at 42.97% and then by Dow Jones IA at 33.61%. As compared to this, the 2 major Indian indices, BSE Sensex and Nifty, has given far better returns at 77% and 70.48% respectively. So, irrespective of where we look, may it be the top-performing stock or be the indices, Indian market is performing better than that of US market. Then, what is the point of investing in US market? Moreover, investing in a different market than the domestic one will lead to additional risks arising out of the economic policies of the foreign country. Then why is the sudden buzz about investing in foreign stocks? There is a debate about diversification as well. Investing in foreign stocks will let the investor diversify the portfolio. But at the same time, diversification brings newer risks also. We've to think about both sides of the story. But why is now the buzz started? The NSE IFSC, International Financial Services Center, started in 2016 with the goal of facilitating Indians to invest in foreign markets. But, since prices of US stocks are very high for Indians, one Amazon share costs 1.5 lakhs. Whereas in Indian markets, we'll be able to build a well-diversified portfolio having stocks of many companies across many industries and market cap. Due to this, Indian investors were not interested in US stock investment. IFSC started US stock trading facility for Indian investors in March 22, along with a facility to buy fractional shares. This facility to buy fractional share has become the game changer for Indian investors. Nowadays, Indian investors can buy diverse US stocks with a small amount of money. This is a significant development in the world of investment. But, the basic question still remains unanswered. Why would I bother investing in US stocks and my domestic market is giving better returns? Stock markets are the same. If Indian market has the risk which can be hedged with buying foreign stocks, then how would I hedge the risks of foreign market? Investing in US market may be beneficial because it protects from the constant rupee depreciation against US dollar. But this benefit boils down to zero if we factor in the currency conversion charges when we invest and again when we monetize. Most of the search results on positive sides of investing in US stocks comes from the blogs run by investment platforms. These platforms benefit from the charges they levy on the transactions done through their platform. As such, attracting people to invest, by highlighting the good sides of a newly inducted investment instrument, is in their own interest. This type of blog articles cannot be considered legit. These are actually a type of advertisement, presented in the disguise of an informative article. There are very few resources available online that clearly depicts the pros and cons of investing in US stocks by Indian investors. My intention of this videos is not to discourage you from investing or give you any investment advice, but to make you aware about few button-down aspects of investing in US stocks that no one is talking about. On this topic, there are some unbiased literature available online. Go check those literature and have an in-depth knowledge of the various aspects of investing in foreign stocks. Based on your personal preference and investing acumen, you may still decide to invest in US stocks and that is perfectly alright. But that decision should be taken only after having thorough understanding of all the related aspects, pros and cons, risks, expenditures etc. and not based on some half-baked, biased and intentionally disguised content available online. That's all for today. Thanks for watching. Please don't forget to subscribe.